In a moment, Minister Horner will be out to deliver his second quarter update. As with the first quarter, he's going to begin with a PowerPoint presentation, and then he'll be taking questions. The embargo is lifted as soon as Minister Horner begins speaking, at which point you're free to transmit the materials. In your media package, in addition to your Q2 materials, you'll notice that you've also got a flood recovery update, as well as the supplemental estimates, a copy of which were tabled last night in the House. After the news conference at about 12:15, Treasury Board and finance officials, as well as an official from the Flood Task Force, will be available in room 512 to take your questions.
Okay. Yep. Good morning, everybody. Well, good morning, and thanks for coming out. I am here, as Jess said, to present Alberta's second quarter results. The results are pretty good. We saw operational revenues go up. That is the direction that we want to see them go. And we've essentially held the line on operating expenses just as we committed to at the budget. Second quarter results show our hard work is paying off. When we released Budget 2013 in March, we were facing a number of challenges. So we set a new path. We committed to fiscal restraint. We bent the line when it comes to expense growth, largely because of our determination to control wage growth in the public sector, as salaries make up around half of our total operational expenses. Management salary freezes, as well as the successful agreements that we've reached with the doctors and the teachers, and as you heard very recently, freezing MLA salaries as well, reflect this fiscal discipline. Now, we've turned a corner. And while I am pleased with the results, I must deliver them with some caution. We are moving in the right direction, but there is still a very long road ahead for us. Fiscal responsibility and spending restraint will continue to be priorities in this budget and the future budgets. At this time last year, we saw the challenges and roadblocks on the horizon. We saw the impact that volatile energy prices and the bitumen bubble could have on our revenue and ultimately on our bottom line. So we held the line on spending increases, we committed to live within our means, and we undertook results-based budgeting to challenge every dollar that we spend. We also forecast the rapid growth that's taking place in our province. This summer, as many of you know, Alberta's population surpassed 4 million people, and it's expected to grow past 5 million people by the time my 3-year-old grandchildren complete high school. We've gained more than 34,000 people from other provinces and countries in the last quarter alone. That's a record. And while the population growth is good, it's also creating more challenges for us as we try to meet the needs of a population that's growing by triple the national average. So we created our Building Alberta plan. It includes a plan to invest in families and communities and a plan to keep building public infrastructure so a much larger number of Albertans will continue to enjoy a great quality of life here and in the future. One thing that we were not able to plan for was the June flood. But the things we had already done, the course we had already charted, helped position us so that now we are already on the path to recovery. We started taking action as soon as the flood hit, to the tune of some $1 billion in immediate support for those impacted by the disaster. And it's going to cost a lot more than that in the long run. But you know what? We are in a strong financial position and we will be able to deal with this pressure. But let's be clear, it's not going to be a cakewalk either. We're going to pay as much of the flood costs as we can this year, and that's going to have a significant impact on our books. Last night, we made our first request to the legislature for additional funding for flood-related costs. You may have noticed that in your media package, along with the second quarter report, there are also supplementary estimates. The Fiscal Management Act requires us to include a revised fiscal forecast with these estimates, so you'll find that included in your package as well. But it doesn't mark a return to our old ways of doing things. As you know, since first quarter last fiscal year, we've stuck to reporting only the actuals in our quarterly update, because they give us the best picture of where we are instead of a best guess of where we will be. And where we are right now is pretty good. We've had a solid economic foundation. In fact, Alberta is the envy of all provinces. We've had stronger economic growth in the last 2 years than any other province, and there is no sign that we're going to slow down. In the last 2 years, Alberta led all provinces in employment and real growth. This year, real GDP is expected to expand by 3.3%. That's up from the forecasted first quarter and at budget. And as I said, the population is booming. We had more than 105,000 net migrants in census year 2013, and our population surpassed 4 million, as I said. We haven't seen these growth rates in over 30 years. There's a reason why people are flocking to Alberta, or should I say there are many reasons. A strong economy, a strong labor market with both a high rate of job growth and low rate of unemployment, an attractive tax regime, and we're the only province with net assets. With all this positive economic news, here are some of the highlights of the second quarter report. After the first 6 months of this fiscal year, we're looking at a 1.1 billion operational surplus. Thanks to higher resource revenue and higher investment income, operational revenue was higher than expected. Operational expenses were lower than expected, mainly due to the timing of health grants. And we remain pretty much on track with the budget estimate on capital spending. I expect operational results should be balanced by the end of 2013-14 fiscal year. Let me be clear here. We will be pretty much balanced, even with spending for flood recovery and even with the return of the bitumen bubble. At the end of the fiscal year, we expect a range in a surplus of $250 million to a potential deficit of $250 million if things go south. But that's all good news. But we didn't get here by chance. We got here thanks to long-term, thoughtful planning and a commitment to fiscal restraint. And we can't predict the future, but as the flood showed us, we need to be ready for it in any event. We've learned that if there's one thing that we do know with certainty, it's that things are bound to change. We need only look back 1 year to second quarter in the 2012-13 fiscal year to see evidence of how things change. It's not just energy prices we're dealing with, but also the differential. The difference between what Alberta's producers get for their product and the world price. During first quarter, we were getting a break from the bitumen bubble. Today, that bubble is back from its holiday. Our revenue was affected by this difference. Last year, we were losing about $40 a barrel, and that's on 2 million barrels per day. And you'll see that our report includes a revised energy forecast. While we are seeing stronger energy prices overall, the differential is still there, and it has grown since the summer. The $15 differential we saw in July is continuing to creep upwards, and this month's fluctuating in the $30 to $40 range. And this is why you can't just take a snapshot at one point in time and expect it to remain the same through the year. It's not the whole picture. The biggest factor in this issue, of course, is market access, and until we open up new markets for our oil, it is something that we're going to have to continue to be cautious about. And that's why opening new markets for our resources continues to be one of the biggest priorities of this government. It's why Premier Redford continues to visit Washington, talking to government and business leaders about the Keystone XL pipeline. It's why the Premier and my colleagues continue to foster relationships in Asia, a potential market of billions. And it's why the Premier continues to promote a Canadian energy strategy, working with premiers across the country to break down those barriers and get our energy to new markets. Mother Nature can be as unpredictable as volatile energy prices, and we saw that this summer. Alberta was home to Canada's most expensive natural disaster, an estimated $6 billion event. We expect that this year alone, Alberta will have to approve about $4.3 billion on flood recovery. Most of our flood commitments under the Provincial Disaster Recovery Program will be recovered from the federal government. We expect to get back about $3.1 billion from the federal government's disaster financial assistance arrangement. That leaves the province on the hook for about $1 billion of the operational costs this year. So while second quarter shows Alberta's finances have improved, this is offset by the high costs of the flood recovery. For the rest of this fiscal year at least, most of our new spending will be tied to the flood. Last night, as I said, in Committee of Supply, I tabled supplementary estimates all for flood rebuilding. I asked for $764 million to meet initial requests for flood recovery. This includes $625 million to address operating costs, such as the initial payments under the Disaster Recovery Program, the cash cards that were distributed immediately following the flood, First Nations housing, purchasing of homes in the floodway, and the hand-up plan to meet for small businesses. We also requested $139 million for capital costs, including improvements to roads, bridges, and water management infrastructure that was damaged by flooding, and restoration projects to address erosion damage. I could have asked for more, but these are the bills that are in now, and I'm only going to ask for the money when we need it, as the legislation dictates. Further supplementary supply estimates are expected in the spring. As I said earlier, the Fiscal Management Act requires that the supplementary supply estimates include a revised fiscal forecast. You can see in the revised document that operational revenue is forecast to be higher for the year. This is due to federal funding and higher resource revenue. Operational expense is forecast higher as well due to the expected costs of the flood and the rebuilding. That leads us to a forecast operational surplus of $15 million at the end of the fiscal year. In other words, operationally balanced. Obviously, it's not as rosy as our 6-month actuals, which reported a $1.1 billion surplus, but the revised forecast takes a couple of factors into account. One, more costs for flood recovery will be coming online over the rest of the fiscal year. And two, that bitumen bubble is back from vacation and in full swing. We expect revenue growth to stall in the face of that growing differential. I'll also point out that we're forecasting a slight increase in Alberta's net assets. This is a combination of savings and physical assets that the government owns, less the liabilities. It's more than a $200 million improvement from budget, and it continues to show that we are moving in the right direction. Again, it's important to note that Alberta is the only province that's in a positive net asset position. So halfway into the fiscal year, Alberta has turned a corner, despite challenges, and because of the new course we set out on Budget 2013. In March, we committed to live within our means. We embraced fiscal prudence, and the efforts in the first 6 months of this fiscal year have given us the fiscal and economic strength to rebuild and manage after the flood. The actions that we've taken, including holding the line on spending increases, saving in good and challenging times, borrowing strategically so we can keep on building, have enabled us to continue investing in families and communities and to build the public infrastructure Albertans told us that they wanted. The hard work isn't over. Yes, we had a good second quarter. We needed it because we still have a lot on our plate, including the flood costs, the return of the bitumen bubble, and the pressures of a growing population. As we saw in June, we need to be ready for anything. It's essential we remain on solid financial ground, and that means being fiscally prudent is non-negotiable. We may have turned a corner, but that's all the more reason to tread very, very carefully. So thank you, and I'll now take your questions.
Why do you say the bitumen bubble is back and it will be in full swing? What are you expecting then?
As we've seen in terms of the numbers that have been creeping up over the last 3 or 4 months, we didn't have just a bump up and down. We've actually had a continual climb in terms of that differential. It's trading been trading in the $30 to $40 range, or 30 to 40% range in the last little while. So our year-to-date number is starting to get much closer to what we had projected in the budget of the 27%. We don't anticipate that some of the blockages or the plant shutdowns are going to alleviate that as short as some others might think. So we're being very cautious about that.
I haven't been able to go through all the supplementary estimates, but it looks like you're about $1 billion or $1.1 billion ahead on the bitumen royalties as of end of Q2. What's the expectation for the end of year then?
Actually, it's not just bitumen royalties. There is an increase in provincial or personal and corporate tax that we're projecting for the year end, which is substantial, and it's important too because it shows that we are broadening not just revenue growth but also tax growth. 51% of our revenues last year came from taxes, not from non-renewable resource revenue, only about 19%. So it is important to see that growth as well. And again, it's about managing how that differential, making sure that we're budgeting for it. So we're going to continue to be prudent on that point.
What was at the end of the year, what are you expecting to generate from not non-renewable, but just from the bitumen royalties? Is that going to be on track for,
we're going to be higher than what we had projected, because even today we're looking at year-to-date numbers of $99 for oil and bitumen differential in the mid-20s. Now, as that number stays high for the rest of the year, that differential is going to continue to rise. But given where we're at today, we are estimating an increase in our bitumen royalties.
Just to clarify, Minister, then, so at the end, at this point, you're planning at the end of the fiscal year to have spent 764 on this million on the flood then, or is that?
No, we'll book the expense. So there's a difference. The supplementary estimates legislatively say we go into the legislature to request what we're going to actually spend, what we know we're going to spend. Different than what we have approved to spend in the sense of we know what's coming down the pipe. What we have approved to date is something in the range of $4.3 billion in disaster recovery assistance, which we have identified to the federal government and suggested to them that they need to increase what they booked in terms of the 90% coverage for the DRP. There are other expenditures that we will have with the flood recovery, but they're stretched out over a number of years because a lot of that is the mitigation efforts that we'll be doing, the capital, there's 1,000 kilometers of roads and bridges that we still are working on. That'll take a little more time. Supplementary estimates are for what we're going to be spending at this point in time and what we know. As I mentioned earlier, we will probably be in the House again for supplementary estimates in the third, or in the next quarter, the next time we're in the legislature, because we'll then have identified more that we're going to kick out. And then it becomes a budget item after that.
Operator, we'll take some questions from the phones, please.
Your first question comes from the line of James Woods with the Calgary Herald. Your line is open.
James, you there?
James Woods with the Calgary Herald. Your line is open.
Hello, can you hear me now?
Yep, thanks, James.
Okay, sorry, I was talking and didn't hear anything. Do you have any sense of how, the federal government recently announced that they would book, that they're estimating costs at around $2.8 billion, and some of that is going to come this year. So just two questions about that. Do you know how much you're going to get from the federal government to be booked into this fiscal year in terms of revenue? And is there any concern about that gap between the $2.8 billion that they're throwing out and the $3.1 billion that you guys are talking about in terms of federal?
A couple of points on that, James, and it's a good question. There's differences in timing as to when we're doing our updates and our estimates, and obviously the federal government did their second quarter updates somewhat sooner than what we were prepared to do ours. They had a number at that time that was 2.8. They put that number in. The Minister Flaherty is well aware that the number is shy. In fact, he made commentary to that when he was doing his press scrums around the fact that he knew the number was going to get higher. As it relate, and that's a function of what we've put into the system in terms of the applications. We're auditing everything that we do to ensure that we are fulfilling the requirements of their program so that we're protecting Albertans' receivable. That's something that we were very keen on right from the start of this to establish a good accountability team that included some oversight from the Auditor General and as well had the federal government involved in that from day one. It's a matter of process of getting those applications and that accounting into the federal government. Having said that, we also, as many of you will know, the Premier sent a letter to the Prime Minister recognizing that the event was going to be, a $6 billion event, that we were going to have a substantial claim to the federal government, that there was an issue around the timing of those payments in the past. The Premier requested that we would receive $1 billion advance on the flood repayments as soon as possible. We've had good communication with the federal government, and we expect that we'll get a positive response on that fairly soon.
Your next question comes from the line of Mark Patron with Sun News Network. Your line is open.
Sir, do you have a total debt number if you factor in capital spending?
I believe it's in your documents that there is an increase in our capital borrowing that we did that is actually related mostly to the Alberta Capital Finance Authority and the Alberta Treasury branches. It's pretty evident that municipalities are looking at the same thing that we are, that when rates are as low as they are, this is an opportune time to build that infrastructure. So when you look at the page 8 of the update, you will see the financing requirements that we have in that document, and then also the forecast, which I actually don't have in front of me right now, but there is also the report of total debt on that one.
I'm sorry, I just have the mail out that was sent. This is just basically a summary, so I don't have I don't have the document you're referring to, so you don't have
I don't have it in front of me.
sort of the global debt figure.
Mark, I don't have it in front of me just off the top of the head, but the debt servicing costs, the financing requirements that you have for the year are all listed in there. We had budgeted that we would be borrowing $3.19 million, $3.19 billion for the year. Our 6-month estimate was 1.6. The actual was just slightly higher than that. That's for capital. We had also budgeted that the ACFA would borrow 3.3 in the year, 1.7 for the first half. They're actually considerably higher than that. And remember, the ACFA is what we on-lend to the municipalities and other agencies. So they're about 900 million more than that. So total 6-month actual was 4.8. Of the total year that we were talking about would have been about 7.3, which again includes the on-lending pieces that we have.
Okay, just so I'm clear, so you're adding 4.8 billion to the overall debt onto 7.3, or did I mishear you?
No, you're adding 4.8, which is the overall borrowings for both municipalities, Treasury branches, Alberta Capital Finance Authority, the Ag Financial Services Corp., and for capital that we've built. We do not borrow for anything on ourselves, for anything other than capital. So we're balancing that off with assets on the other side.
So the number 12 billion,
As I said, Mark, and up here, I don't have the year-to-date stuff on there, but it's in the consolidated fiscal plan that is in the supplementary estimates.
thank you, sir. Much
Yep.
appreciated.
And you can also, at the technical briefing at 12, they'll have that number for you for sure. Okay, maybe from the floor?
Can you tell me what the $200 million in increased assets would involve?
Basically, what that means is that the assets that we are building and the borrowing and the cash that we're creating in our savings accounts are now in a net positive position. So we're moving back the other way. As you change your net assets, that was the calculation of the deficit in the past. It was a change in net assets. So in actual fact, what we've done, or what we're projecting, is that entire thing has now turned the corner into a positive. We will be building net assets now as opposed to losing net assets.
So is that, are you counting highways and hospitals, or is this cash money?
It's both. The sustainability fund converted from cash to assets. And I still argue that your hospitals, your roads, your schools have value, and they should be listed as value, which every other jurisdiction does as well. I think it's important that we do show Albertans that their assets have value, and we always have. We haven't changed anything there.
Is it an accounting procedure, or is there actual assets of $200 million?
No, there'd be actual assets there, yeah. Cash was money going into the savings, and assets that have been built, just like you would have in your home.
I can't say what they are.
Well, if you look at the capital plan, they're listed there. I don't have them off the top of my head, no.
Overall, how are you feeling about all this? You mentioned pretty good, sort of some muted words, but nothing, didn't sound overjoyed. How do you feel?
Well, if the disasters that we've incurred this year, and that includes forest fires, that includes some of the issues around hail, and also, of course, the largest economic disaster this country's ever seen, if they had not happened, we'd basically be looking at balancing the budget in this year. Having said that, and that's pretty positive. Having said that, what I'm very comfortable about and pleased about is the changes we made put us in a position where we can handle the largest economic disaster the country has ever seen, and still be in a position where we will be very close to operationally balanced and probably an operational surplus, and sets the groundwork for the next year in a very positive way.
Your government has posted 6 consecutive deficits. When are you going to be on the plus side of that with a surplus in the accounting days of old?
Well, the accounting days of old versus the accounting days of today haven't changed. Our consolidated financials are still prepared the same way. And I know there's lots of people out there that want to try to confuse Albertans about what real accounting is. That's unfortunate. The change that we've done, and as I just said, had the floods not happened, we would be in an operational surplus position today, which you would also see the net assets would be changed by that amount, because the operational surplus would be cash.
Take another question from the phones, please.
Operator?
Operator? A question from the phones, please?
Nobody there.
Yeah, there's people here.
Go for it.
Yep.
Minister, it's Chris Oracle from the Calgary Herald.
Hi, Chris.
Can I just double back to the question regarding the borrowing? I noticed here that you mentioned that you borrowed $1.2 billion more in the first half of the year, mainly because of the Alberta Capital Finance Authority. And it looks like there's also some additional borrowing from the ATB. Can you explain why it is that the ATB and for that matter, the Capital Authority need that money? And I guess the second part of that question is, how do you see that impacting the total borrowing requirements for the entire year?
So we actually make a little money on that stuff, Chris, because when we on lend, we actually add the recovery costs of whatever our debt servicing costs are, and some small amount to show a revenue there. So the borrowing that we do on the on-lending does not affect the cap because frankly, we're making money on it. The other piece of this is that the municipalities, which is the majority of that Alberta Capital Finance Authority, all have debt ceiling caps of their own. They are the ones that are requesting the borrowing through the Alberta Capital Finance Authority. And it's important because we only have one taxpayer. We have a very strong financial balance sheet. We have a very strong credit rating. So when we go out to get these borrowings from the capital markets, if you're looking at $1 billion to borrow and you're going to have a half point or a full point difference, that makes a huge difference to the cost of borrowing to taxpayers. And it should be flowed to municipalities, and that's why we use the ACFA to do that. Similarly, because we are the single shareholder of the Treasury branches, we want their retained earnings to maintain in a very positive way and to continue to do that. Plus, we are the guarantor of all of the Alberta Treasury branches, both deposits and their liabilities, because we are the single shareholder. So the reasoning behind doing it is I think, very financially sound, and we will continue to operate that way.
Okay, and you expect that the total borrowing this year, the requirement will be $7.3 billion, or will that be much higher than that?
It depends. If the municipalities decide to borrow considerably more within their limit, that number may rise.
All right, thank you.
Yep. Somebody had one down here.
Capital spending is down by 72 million. Can you explain why that is and what areas are affected by that?
It's probably a timing issue around when those projects are moving forward and the cash that would have gone out through the capital plan. We've not removed anything from the capital plan. In fact, we've added a number of items with regard to the flood and the assistance within the capital plan, but there have been no projects that have been canceled or deferred in the capital plan. It would be a timing issue.
And in addition to that, education down 2 million. Can you explain that number, why it's down, and what areas are affected?
Actually, both of the on the operating side and on the capital side for education, those are timing of the grants that went out. So you'll see them catch up in the third quarter.
So nothing has been deferred?
No.
Okay.
Okay.
Operationally with health, they're down by $500 million. Can you explain that?
Again, timing of grants. As we move forward to closer to a business type reporting where we're actually separating out in the quarters what we anticipate we'll spend, we're going to get better at understanding when these cash flows go out. And this is one of the benefits of actually moving to the quarterly reporting. We now have a much better, and you have a much better understanding of when the highs and when the lows are within the operational side of these departments. You'll see that get picked up, I'm quite certain, in the next couple of quarters, the third and the fourth quarter.
Final question from the phones. Operator?
Your last question comes from the line of Jen Gerson with National Post. Your line is open.
Hi, Minister. There's a line here on the page, on page 7, talking about capital amortization and inventory consumption. Could you give us a brief explanation of exactly what that means?
Well, amortization is simply amortization. I mean, we depreciate all of our assets on our balance sheet. We actually have about $1 billion worth of amortization that we throw out there. We also have consumables, just like you would have in any of the businesses. So that would be things like road salt that you're going to put on the roads when we have some of the larger snowfalls that we've had. So that basically is what that is. It's simple consumables of assets that we would have purchased before. And I've don't want to, there's probably accountants in the room who can do this even better than I, but if you've bought assets, you're consuming them as inventory out of your warehouse, you're going to actually expense them in the year that you, or the period in which you've consumed them.
When we look at, like, say, capital amortization on the transportation file, does that mean that these are the costs of financing the roads that we're building using the monies borrowed from the capital budget? Is that
No.
how that works?
No, that would be the depreciation expense that we put on an asset. So even though, and some, some who argue that none of Alberta's assets have any value, we do think they have value, but we also depreciate them just like you would in a business. So even a road has a depreciation expense.
So you're depreciating the value of the highways, essentially?
You betcha.
Okay, but that's not calculated in any other expense sheet at any other point, is that? I mean, you're not
Sure it is.
taking money out of another budget because of that?
No, that's part of our operational expense.
That is a part of your operation?
Absolutely.
But
Debt service,
where is that calculated in the operational expense?
in each department, they have an allocation within their department expenses.
Okay.
Yeah.
Okay, thanks.
In long term, I had it explained to me that if you ever get these pipelines going the way you want them to do what you want them to do, that your revenue is gonna be flat for a little while and then it's gonna spike way up. Is that description accurate?
I would say that if you look at the anticipated production increases in the oil sands and other energy assets in the province of Alberta, and you think about, we're going to go from 2 million barrels a day as it is today to potentially 5 million barrels per day. That royalty and the return and the payout of those royalties is going to happen considerably faster. You'll recall that in a couple of budgets ago, we had anticipated that payout on a number of projects would come soon because we were looking at $120 a barrel oil and no differential. That has obviously been delayed because remember that differential creates the Western Canada price, which is what the payouts are based on. So it is, I'd be very bullish about Alberta's future in terms of those royalties, because if we can get them to market and the differential does come to a reasonable amount, there'll always be a differential. It should be based on what the basis is for that, getting it to market. Very similar to the grain industry. But that differential gets to a realistic level, and Albertans will be served very well by it.
What might the, and this might be speculation, I don't know if it's too early, but what might the agreement with Iran do to oil prices and potentially, what does that mean for Alberta?
It's going to affect the Brent price, there's no question, but it depends on which way it goes. Because at this point in time, I think they've agreed to continue to agree to work towards something that might happen in the future that maybe somebody will actually agree to down the road. And I think the market will take that into consideration, and they're very astute at doing that. That's part of the issue of getting it to market. That's why we need to get to more than one price discovery point in North America. We have the Gulf Coast. That's it. We need to have East Coast, West Coast, and the Gulf Coast so that we can actually access a market of 1 billion people.
Thanks very much, everyone.
Thank you very much, ladies and gentlemen.
Ladies and gentlemen, Rob Anderson.